We're talking about the 7 things advisors must know to serve clients this year. Clients want to know, number 1, that their advisors at least have considered the higher than normal inflation rates. While we don't give investment advice on this show, it's not hard to discern that the need for money requires a different approach than most advisors have been taking, and it's hard to save more when everything costs more. Different investments do different during high inflation than they do during lower inflation. People often turn to real assets, real estate, precious metals, energy, commodities, but these each trade in cycles, and you need to understand when and where they work best. Warren Buffett, for example, says he doesn't like gold as an investment. And I personally think gold is more money than an investment, but it does seem to go up in price relative to a falling dollar during periods of inflation. Forced energy policies from the Biden administration and all-electric fleet, these create inflation, but they also create opportunities, and you need to be aware of where and when to invest. We need to worry about food and food inflation, alternative currencies, the dollar under attack. By the way, did you know that in the inflation in Zimbabwe in 2008, the worst in world history, their stock market actually performed better than any other stock market in the world? And I recently spoke with someone from Argentina who told the story. As soon as he got paid, his father would rush to the bank, cash the check, and go to the grocery store just so they could buy groceries before they ran out. Maybe we need a solution like spendable gold and silver, transactional gold and silver, pirate money. Well, that's true. It was true then, it's true now. The inflation story is just the first of 7 truths that advisors need to know. And the second one has to do that advisors need to understand culture. Most people are not just about making money, regardless of the impact of society. If making money were the only thing, maybe we'd all sell drugs, prostitution, and pornography. There's money to be made there for sure, but it's a dirty business, and values matter to most people. And the values that people see displayed by many corporations today do not align with their own. We see this in the consumer behavior where people turn away from Bud Light and Disney, because they have such woke advertising or woke programming. It should be the same and even more so be true for investors. But I don't think financial advisors have caught on yet. So the second thing to know is that people do not want woke. I'm telling you, advisors, most of your clients, if asked the question, would say, I don't want woke. Now, if you are devout in your beliefs, you might turn away from an entertainment company that promotes things contrary to those beliefs and shun their products. How much more so should you be careful with your investments? There's a word for people who do one thing and believe another. It's called hypocrites. As an investor, you're an owner. In other words, a partner with those promoting values contrary to your own. Now, Jesus taught in Luke 17:2 that it would be better for people to have a millstone tied around their neck and be thrown into the sea than to cause one little person to stumble. But what if you own shares in a company that is doing that, causing young people to stumble? Are you speaking up? Are you selling your shares? There are 2 things you can do. You can get out of that company entirely, or you can exercise your right as a shareholder and speak up and vote your values. As a financial advisor, you should understand what your clients want, and you should help them with it. There's a whole generation who entered this business in the past 40 years who think you just buy a good stock market index fund and let it ride. Now, it's hard to argue with the performance the past 40 years, but index funds, they've got good performance, but are they being good for society? You hear a lot about BlackRock, Vanguard, and State Street. Those are mostly index fund suppliers where people are naively giving them their money and then they're enforcing their policies through their investment holdings. So what should an advisor be doing about this? Number 1, an advisor should be asking clients about the values they hold and applying them when investing for those clients. Number 2, an advisor should be helping those clients vote their shares to reflect their values. It's called proxy voting. We've explained it in previous episodes. And number 3, advisors should monitor whether investments match the cultural fit of their clients.